Welcome to your weekly market update where we talk about everything real estate and mortgage related. We have a ton of information to talk about, so I'm just going to jump right in it. First thing is the Friday jobs report came out, and the Bureau of Labor Statistics for March reported that 236,000 jobs were created. That was right in line with the 240 jobs that were expected. Now, what's interesting is 72,000 of those jobs came from leisure and hospitality, which has been a huge driver in the jobs gain. But we have gained 98% of those jobs back from the pandemic numbers. So there's not going to be a lot of job growth coming from leisure and hospitality. So we're going to see more weakness in my opinion, over the coming months in the jobs report numbers, which will end up helping the inflation and also helping interest rates come down. What also is showing weakness in the job market is the average hourly earnings were flat month over month, and now are only up 3.3% year over year, which was much lower than just a couple months ago when it was up 4.4%. So we're seeing the average hourly earnings go down, and then we're going to start seeing more weakness in the employment numbers, which is exactly what the Federal Reserve is doing with increasing the federal fund rate. They want to slow down the economy, slow down the jobs report in the job market, which will then slow down spending. Overall, the job market is continuing to show weakness, which will help inflation and help interest rates. So let's talk about housing. Zillow showed that home prices increased by 0.9% in March, the highest monthly reading that we've seen since June of 2022. And this is primarily because of a lot of activity and low inventory. Okay, home prices are up 3% year over year and are only down now 3% from their peak. And this is nationwide. So depending on where you're at and what market, we are just seeing a very strong housing market based on the inventory that we have and the demand that's out there. Okay, so here's some more stats to talk about. Zillow showed home prices rose slightly in February and also in March. FHFA showed home values went up 0.2% in January. CoreLogic showed home values rose 0.8% in February. Things are starting to pick up. Just imagine what the market would be like if inflation and rates come down even further. So we're going to keep a close eye on it. Call me if you have any questions about real estate and where that market is there. And then finally, we're going to talk about mortgage and inflation. So the March Consumer Price Index, the big inflation number, came out and showed that overall inflation increased by only 0.1%, which was lighter than the 0.2% expected. Year over year, inflation declined from 6% to 5%, which was lower than the 5.1% expected, and has declined sharply from the 9.1% peak. So we are heading in the right direction. We're not quite where the Federal Reserve wants it to be. They want it to have a target of 2% inflation. We are heading in that direction, which should create some relief in interest rates and continue this slow drop to where we're expecting to be probably in the mid to low fives just in the next couple months. Now, applications from last week to this week are up 8%, but we're still down 31% from last year. And then from last week to this week, mortgage rates dropped from average of 6.4% to 6.3%. So we're going in the right direction. Things are looking good. Just got to get more inventory to help buyers find the right property for them to get under contract. So give me a call if you have any questions, mortgage, real estate related. That's what I'm here for. You can reach me at 847-942-1497. Bye.